Hey, welcome in. You're listening to a daily editorial on the Korelin Economics Report. I'm Korelin. Appreciate you joining me. We are doing more of these in a video format, and the reason we're doing that is because I want you folks to be able to put a face with a name, and we're starting out with an old friend of ours, an old client of ours, and a fellow who is involved with a company that I happen to be an investor in through the Encompass Fund. Rob Gray's on the other side of the camera. Rob is a very, very interesting individual. He's been involved with Yale Simpson and Exeter and X-Story for quite some time now, doing a very, very good job handling the investor relations aspect of both of those companies. As you are all aware, X-Story has gone by the wayside in a very positive sense. They were bought out by a company called Yamana. So the rest is history on that one, but they are focusing right now wholeheartedly for the time being on Exeter. Exeter trades on the New York Stock Exchange under the symbol XRA. They are, as most of you know, down in Chile. They have their flagship property is the Caspiche property. Big Al has visited that property, along with Rob, interestingly enough, at 14,500 feet. It is an incredibly impressive property. Huge, absolutely huge, and I think good things could happen there. Rob, first of all, how you doing, my friend?
I'm doing great. I'm glad to be back on your program here, Al. Thanks for having me.
It's a pleasure to have you. What's going on with Exeter right now?
We've had some press releases out over the last little bit. It's been slow. Obviously, we're in that engineering phase of our property. We put out a pre-feasibility in January. It was very successful. All the analysts liked it. Since then, we've just been doing more engineering on the property. And you've had the Chilean winter come in. We were drilling for some water, May, and we got snowed out in early June. We hope to get back there in early to mid-November to get back to water drilling. As people know, we have a third of the water we need under option for the Oxide. That's 300 liters per second, and for the Oxide we only need 85 liters per second. But we'd like to find more we need for the whole project. So we'll be working on that for this season, and that's a big drill program. I know people go, water. It's very important at this stage of our company to drill Caspiche itself. We're not going to get a lot of ounces. Maybe you'd see that later on in the mine life, but let's get to what we can do now, and the water drilling is something we're doing coming in the next month or two.
Okay, and then down the road, what do you see as being the upside specifically pertaining to the Caspiche property, Rob?
I think keep working on the engineering. We're looking at the Oxide. This Oxide, we put that out in June of 2011, and we gave a bit of an update in the January pre-feasibility study. We'll be looking at, looking into the first quarter. Should we look at a full feasibility study on the Oxide? Right now, we've decided to continue to do the engineering to a feasibility level and work towards that without putting a full feasibility study together because of the market conditions where we are. We'd like to keep work on what we're doing and keep the project going that way on the engineering, and then when market conditions get better, look at doing a feasibility study, because the next question everyone would say, great feasibility study or something like that. How are you going to raise X amount of money in this market? Because you can raise money, but it's very expensive money.
Right. Well, I wouldn't think you guys would have any trouble raising money, but as you say, the dilution that I think would probably result from that could be detrimental to existing shareholders, and I know you guys, right. Yeah, and you guys are very fiscally responsible for your shareholders, so you probably, I'm sure, wouldn't want to do that. Rob, I have a question for you, and that is a number of analysts who I know, geologists, for example, are saying the one characteristic that we believe, and these are personal opinions, exists on Caspiche is the grade is simply too low. How do you feel about that?
The grade is the grade. It's effectively the same grade as Serra Casale across the way from us. As the crow flies, it's about 12 kilometers away. Right. They're in permitting to get their project environmentally permitted, and it should be in the first quarter of next year. So that's something. It's exactly the same. And Barrick paid $800 million in 2007 for Arizona Star, and then paid another $500 million to get the 50 or 25% from Kinross Mining. So right. They're into this for what, $1.2 billion, $1.3 billion in acquisition costs, and then I would imagine they've got another 200 to 400, maybe even $500 million in studies and drilling, etc. that they've done to this date. So the grade is the grade. It's the same as Barracks, and Barracks moving into it and moving onto it, and it didn't seem to bother them to buy Arizona Star back in 07. And then the next trench of in 2009, in the middle of the financial crisis, they bought that 25% by Kinross, which is intriguing. It intrigued a lot of people when they did that.
So basically, in terms of the situation with the grade, you're saying it is what it is. There are two very, very successful other companies down there in exactly the same area that are simply clones of their properties are clones of Caspiche. Is that right?
Effectively, yes. And remember, I think we look at the big project. We're now looking at this as an oxide first, then the sulfide second. I mean, what can Exeter do with the oxide? It's a lot smaller capex. It was over 300 million when we put it out in June of 2011. I'm sure it's gone up a bit because things go up. If we were to do a capex study on it now, but I think people focus just on the full project, the $4 billion project, which is a good project, and it surprised people when we put it out this past January. They thought the costs were going to be over, $6 billion, and it was 4.6 or 4.8, and it's a big project, but people were surprised. We saved $1.1 billion in different OPEX and CAPEX, and people were surprised by that. So now we're looking at how can we, have a nice small mine, about 200,000 ounces a year on the oxide, the gold oxide, and there's silver in it, to start it and make cash flow. And that's what people are asking us all the time. Can you do that? How can you do that? There's another company that's in Peru that have a similar but different deposit, and they started on the oxide, and then they've got a big sulfide that might be difficult for them to do. And a lot of analysts and different funds ask that. Can you have that model? And we're looking at that now. We looked at, 5 years ago, we had one hole into this project, and it was interesting. And from there, we've gone to a pre-feasibility study on the full project, and we'll be doing more engineering going forward. I say, if you didn't like the grade 3 years ago, you're not going to like the grade now, and that's fine. We accept that. Not everyone's going to like it. But these big companies are looking at projects that are 25-year mine lives. Or 20-year mine lives, and they could put their people on it for a long time. And if you looked at Sarah Casale, if it was in production, it would make a lot of money. Yes, there's a big capex to it, and we're not seeing the big capex companies going that way. They're contracting right now to get their balance sheets and get their costs underlined. But these projects, if Yale was here, he would say these projects will have its day. I think people forget we have $57 million in the treasury right now. We're not going to burn through that money to burn through the money. That's just not going to happen. So we have a lot of money to do a lot of different studies and things. We've also talked about maybe looking at other projects, on the exploration side. If I can take the best of the Exeter exploration geologists and the Exeter geologists, would that make sense? It's something, there's a lot of companies that have come and looked at, say, hey, you've got some cash here. Can we look at that? But it's not something we're in the forefront. If somebody comes to us, we'll look at it. Obviously, we should. Maybe we can add some shareholder value that way to the shareholders. But it's about Caspiche. It's a big project, but we're looking at that oxide. How can you start that? And there's a lot of people that like to see us get going on that and put out a feasibility study in the next couple of quarters.
Well, what are the odds of that happening?
Well, we'll see how the market is. We'll reevaluate. We said we'd reevaluate in basically the first quarter of next year, and we'll look at it and say, does that make sense in this market condition? Because it's not too expensive to do a full feasibility study on the oxide. If we did a full feasibility on the whole project, that's when your big costs come in. But the oxide makes sense for our size of a company, and people are asking those questions. I'm asked that every day about it. So we are looking at that. We have a gentleman named Matthew Dortman who is doing that. He's a great engineer, looking at these type of how can you do these things. And there's other things internally we're looking at that we will keep moving forward as well.
Rob, I want you to do me a favor, and that is we want to stay in touch on this one, and I know that we will. Ladies and gentlemen, I have to tell you, this is one of the more serious companies out there. This is not investment advice that I'm giving you because I'm not a registered investment advisor, but I have been following Exeter for a long, long time, almost since its inception, as a matter of fact. I am not even close to being arm's length. This is not an independent opinion, and the reason I'm saying that is because I wrote a check and bought stock in the company through the Encompass Fund. Okay, number one. Number two, the Exeter family, Rob Gray, his wife, Yale Simpson, his wife Donna, their son Corey, etc. These guys are all personal friends of ours. I've got skin in the game on this one, so I'm not telling you what to do. I want you to, though, if you have any interest in this company, click on their banner on our website because they are a sponsor, number one. Pay special attention to the management team, if you would. The management team of Exeter, I think, is some of the best in the business. Again, not investment advice. This is just what Big Al is doing. Rob, thanks so much, buddy.
Thanks, Al. I appreciate that.